Recording in progress.
Hi everyone, welcome to our latest video on property analysis in Singapore. So basically, this time our seminar from November 2022 to covers November 2022 to January 2023, 3 months. It's entitled The Last Chance. I understand this sounds a bit cliche, it sounds a bit markety, a bit salesy, but the reason why this seminar is being called The Last Chance is because I sincerely believe that in the coming months in Singapore, the property market will permanently have such a huge gulf in between private property and public HDB property that buyers of HDB property or owners of HDB property will subsequently no longer be able to afford private property easily because private property gains will easily outpace public property gains in the future. This seminar is also about how the property market will perform in the next few months, recommendations about what will happen in the next few months, what you can do to maximize the situation for yourself. This is basically a crash course on property investing in Singapore, on how to maximize the benefits for yourself by doing basically minimal work, because I've already done most of the homework for you. So without further ado, let me continue on with the presentation. So what's happening on the market right now, right? We see fixed interest rates going to 4.5% by UOB. Uh, Yet despite the high interest rates, we think property prices are supposed to be lower. Sales are supposed to be lower, but property prices are hitting new highs, right? And sales seem to have slowed down in some sectors, especially HDB. But for condo and landed, not really, right? So what is happening, right? Why is interest rates going up, but property prices are not coming down, or volume is not really coming down yet? You know, so the property market today in Singapore, it's a bit like a buffet, and buyers and tenants are all snatching properties, getting whatever they can afford. At the same time, the property market, it's facing more and more issues, less and less food on the table because there's supply issues. There's a massive backlog. A lot of units are still not on the market. They're not ready yet, right? So what I want to share with you is that by end of this session, you should be educated upon where the market is going. I'm going to give you some safety advice on your finances and giving you tips and tricks to maximize this particular market. And what you will not get is, this is not some sales seminar. It's not some buy. It's an educational seminar. Any action you choose to take will be based on what you yourself have decided, and hopefully by the end of this session, you gain a friend and advisor in me that you can keep for a long, long time. So who am I, right? What's the background? I majored in economics, I majored in history, in business management, which turned out very, very useful because currently the situation in property is very motivated by both the world economics, by businesses, by politics, right? I also worked as an analyst my entire life, starting off at DBS, and I've been doing property for 13 years. I did hundreds of cases. My success rate so far has been every single case has been profitable for my buyers and for my sellers as well. Actually, I run my own group, skyteng.com, with a group of very talented other property advisors, which I'm honored to work with, and I'll be happy to introduce to you should you be looking to engage in any property transactions in the future. So, what is really happening is I want to debunk some myths first, right? Property prices are not reliant on interest rate. In fact, a lot of evidence suggests that interest rates and property prices have not much correlation. Okay. Number two, now I wish to highlight is that property supply is still stuck. There is not enough supply to meet demand until 2026 due to construction issues, transportation issues, and the continued demand in the market that will continue to be there. Not for every single class of property in Singapore, but for most classes, which I will explain later on in the video. Number three is that Singapore have to allow more foreigners into Singapore, and its economy will likely to grow more. This is directly related as the ruling party, PAP, in Singapore has repeatedly mentioned and are employing this strategy right now. uh, what is the truth is that property is reliant on economic growth. There is a very clear correlation there, right? And so, if you want to know whether property prices will continue going up or not, how it will behave in the upcoming years, on when you should buy, when you should sell, it really depends on whether Singapore's economy will continue to grow. And I will give you good reasons why Singapore's economy will grow further, right? However, this economy growth is very uneven. So, just to debunk the interest rates, right? So PPI here, what we're looking at now, right now, PPI is property purchase index, how property prices have behaved, and SIBOR is basically the interest rates, right? We see a lot of information that actually proves that interest rates and property prices are not inversely related that much. First one is here, right? Interest rates are going up, yet property prices are going up, right? Second bunch of data, interest rates are going up, yet property prices are going down, right? Again, makes no sense. The third one, interest rate is at an all-time low of below 1%, right? Yet property prices did not shoot up. This clearly shows that interest rates and property prices are not directly related, right? It does not matter if the house is costing you more every month in terms of your installments due to higher interest rates. It matters whether you can afford to have a roof over your head, because property is a need in Singapore, right? That's the culture here. However, property prices is a lot closer related to economic growth. In fact, there's a 0.74 relation here, right? So this, in fact, comes out from OCBC, a very reputable bank, one of the highest ranking bank in the world, showing that in times of good economic growth, property prices tend to grow more. In times of bad economic growth, sometimes property prices can come down more than the drop in growth. So you can see that when the economy is doing well, property prices tend to go up even faster. Hence, a potential gap between property prices and your earnings can happen. That means property prices can actually grow faster than your earnings, right? So property prices same is directly linked to economic growth. One stops, the other stops. It's like the traffic light and the car. Traffic light being the economy. If the economy stops, the car stops, which is the property, right? Car is the property stops as well. So the golden question today is, will Singapore's economy still grow? I have three pretty good reasons to think that Singapore's economy will continue to grow despite the slowdown in the world economy, right? I understand that Singapore's economy is closely linked to the world's economy. However, in this very interesting political and pandemic time, Singapore's economy is a outlier, it's an exception instead. And how long it will last, it will probably be pretty long, right? Number one is that the world economy, it's leaning towards recovery. They're trying to help each other to recover as a whole as much as they can, even though every country wants to grow. They realize that increasing trade between themselves is the fastest way to grow back after COVID. Number two, due to some political situations between the East and the West, we notice that ASEAN is now officially in the crosshairs. And because ASEAN is the hotspot, a lot of investors, a lot of expats will actually come towards this sort of middle ground between the East and the West. And number three, the unique attractiveness and flexibility of Singapore will let it tap on the growth in ASEAN and in the world. So likely, yes, that Singapore's economy will still grow. So what I mean by world's economy is leaning towards recovery, right? Number one. One, we see that G20 recently they just had a meeting at Bali. They pledged to do some coordinated action. See, once again, they're working together to see how to have a strong economic global recovery, right? And you see that how the West is engaging China and how China is also trying to engage the West. Not every time it succeeds, but we start to see things trying initiatives coming from both camps, right? Like how China has a growth plan to try to boost the world's economy, how the West is trying to grow the economy. And I get to show you more data later on what they actually do. It's not just all talking. It's actually followed up by quite a bit of action and quite a bit of money. We get to see that in 2022, this year, and most of the world's economy is moving towards back to growth from the 2020-2021's horrible economic growth where most countries were in the red. Now you can only see that only conflict regions and only places with political instability are having negative growth, such as Russia, Ukraine, Sri Lanka. But everybody else seems to be growing very, very comfortably. In fact, the growing region seems to be concentrated on the less developed areas of ASEAN, Africa, and Central America, right? So world economy is trying to recover. What they've been doing, for example, is that in the G20 summit, the West committed 10 billion to Indonesia to try to create more green energy there. uh, the Chinese are committing 3 to 7 billion towards Cambodia to try to develop the infrastructure there. You start seeing that they're trying to reopen up routes as well, and try to open up shipping routes as well, and try not to close up the essential trading routes, despite whatever that's happening. And this even includes China as compared to what's happening in 2020, 2021. And part two about the world economy is that I want to talk more about ASEAN. Sorry, I want to zoom into ASEAN. So there is also a political situation there. We all know that the G20, there is some political tension between China and Canada and US, etc. Right? So it's also a bit about West and China. And they have sort of decided that ASEAN is their middle ground, that both of them will battle it out. So if the West, being US, being Western Europe, are no longer that reliant on China, or they don't want to rely on China that much because politically or militarily they are worried that World War III could happen or some sort of Cold War could happen, they naturally want to move their manufacturing somewhere else. Because in China, we was once known as the factory of the world, produced most of the goods that we see in Taobao, Amazon, Shopee, and Lazada, etc. They now need to produce their goods somewhere else. And we can see that the growth in 2022 is largely in areas where the West are starting to produce. They're producing in Africa, they're producing in Central America, they're producing in India. And most interestingly, you notice they're producing in Southeast Asia, right? We don't talk about Myanmar and Thailand right now because Myanmar and Thailand right now has some political instability due to their military intervention in their politics. But Vietnam, Malaysia, Singapore, Indonesia, and even Cambodia actually is doing quite well in terms of economic growth, and they will continue growing there because of low wages in a high population, able to produce the factories that China has been supplying, right? So this whole area, a lot of manufacturing is now shifting towards ASEAN, towards India. A lot of manufacturing shifting towards here. Africa and Middle East mostly being supported by either the Middle Easterners themselves or the Chinese, and Central America, right? So you have Central America, which is politically not super stable, and you have Southeast Asia, which is a bit more stable, which is why a lot more investment is actually growing here, right? So as I mentioned just now, for example, oh sorry, it's not 10 billion, it's 20 billion. So for example, US decided to pump $20 billion into Indonesia to try to help them develop green energy, create more energy capacity to support their new factories there. Uh, CNBC, S&P states that S&P, Standard and Poor's, the leading rating agencies in the world, is saying that Asia Pac will be the global economic growth there. So we also see that demographics, that means high population, low wages, is bound to keep the ASEAN region stable in uncertain times, right? China is also wanting to expand its manufacturing into ASEAN because of the high population and low wages there, right? And these are all our neighbors, right? With the HQ being in Singapore, which I will show you later as well, right? as how Vietnam is also nearing this 11 billion plus deal to shift the economy. All this is not just helping to create cleaner energy, but it's also to increase the energy in these countries so that they can support their new factories to produce low-end goods, right? So China is trying to shift towards higher end goods, and so all these low end goods is moving towards where ASEAN is. The last part is just now that ASEAN is growing, but Singapore will be the capital of ASEAN of sorts, right? How do I know this? Because we see that, hey, when we talk about higher end production, it's also moving towards ASEAN. We see GSK is moving a new factory here. HSBC is opening offices here. That is because in reality, all these Western firms, all these expats that come into ASEAN to expand their factories, to try to start producing and replacing what China's manufacturing has been doing, they use Singapore as a base because Singapore has a world-class infrastructure, has good healthcare, good transport system, has a very good education system for their kids. Hence, you can get your managers here, and your managers want to be based in Singapore. And Singapore flying to Indonesia, to Vietnam, to Cambodia is a simple 2-hour flight if they need to go. To Malaysia you can even drive. To Indonesia, certain parts you can even take a ferry and one hour or so, which makes Singapore a very attractive location to be the HQ. And Singapore has one of the lowest business taxes in the world, most business friendly environment in the world, right? Which explains how we outperform other Asian foreign direct investment hubs, right? FDI hubs. So at the country level, we see that how US is pouring money into Singapore in 2021, investing in more than 102 projects, right? So even though we start seeing like, hey, Facebook is releasing people, Twitter is releasing people, we have not considered the good part of this, which is basically how HSBC, how all the banking Standard Chartered, etc., is expanding the operations in Singapore, how electronics, how all the producers of chips, producers of parts in cars, producers of parts in laptops in Singapore are all doing well and hiring more people. Communication and media, we are doing business and professional services such as accounting and law firms, etc., are doing really well and expanding in Singapore. They're hiring people left, right, and center. Clean energy as well as ESG, environmental, social, and governmental issues. They're doing clean energy, they're doing wind energy, solar energy, doing waste disposal and recycling. It's all doing really, really well in Singapore. We're getting new technology in, we're getting top level expats in. And that's why Singapore, throughout the entire ASEAN region, it's probably the only uh, city with this high level of standard and will continue attracting in the next 5 to 10 years at the very minimum, right? So all these guys in these sectors are doing really well, right? We heard issues about how in America there are Twitter layouts, in China real estate is not doing well. Doesn't matter. Doesn't matter because a lot of money, because of COVID, because of political tensions, they're going to shift towards ASEAN. And when they shift towards ASEAN, Singapore is sort of the capital where everybody has to be based at, or prefers to be based at the very least. And as such, this five that is growing in Singapore accounts for roughly 60-70% of the economy. And if 60-70% of the economy is expanding rapidly, our economy will continue to grow. So how much these guys actually earn, these growing industries actually earn? These are our average salary now, 4,680. Yeah, $4,680 Singapore dollars is the average salary of an average Singaporean right now, 2022. However, people in working in these five sectors, in the better sectors, earn on average $6,533 per month. They earn a massive 39% more. When you earn a massive 39% more on average, you are naturally able to afford something a bit better. Even if you're not naturally able to afford something better, you would want to keep the money safe and you would not keep it in a depreciating asset. You would expect a better house, you would expect a house that retains value, you expect a better school, you expect better food, etc. Correct? So not only we have this whole bunch of people who are earning more, 39% more than the average Singaporean, we also have new people entering Singapore. So we have a couple of new friends in. So let's not forget our new migrants coming into Singapore now through our global investor program. So anybody who's entering through a global investment program, and there are hundreds of them in the past 2 years, not even including 2022 yet, because the data for 2022 has not been released, is that we have hundreds of these people from Asia all the way to Americas coming into Singapore, and they must have net investable assets of 200 million, and they must invest at least 2.5 million Sing dollars into a business here or start a new business, hiring Singaporeans. So this generates even higher paying jobs than Singaporeans. And these new friends coming, these new Americans coming in, are not just investors, but they get permanent residency if they do this, and they can possibly apply for citizenship 1 year later. This creates a new breed of Singaporeans, Singaporean PRs that are very, very wealthy, right? We also, so who have we attracted, right? So we attracted, for example, James Dyson, who employs thousands of people in Singapore right now, no? Even Mr. Ambani from India, one of the richest men on earth, set to open a family office here. They're going to move their base here. Economically wise, business wise, yes, they have a lot of it in India, but even the boss himself is going to be based in Singapore, right? Much less his managers. So the second group of people who is still coming to Singapore are the overseas network and expertise pass people. So these people earn a monthly salary of 30,000 or more. And all this information is listed directly from EDB MOM, okay, governmental websites, not something that appears from me, right? And despite coming up with all these new programs, right? We have one whole range of programs now, right? It did not face foreigners. In fact, it attracts more foreigners to come in, as we see how Singapore is now among the top 10 most desirable countries to work in, right? And fewer Singaporeans want to leave. So population here will continue increasing, right? And the fact now, what we have learned so far is that we know that the world economy is trying to recover, that the big players, the big nations, the Western Bloc, the Americans, the Chinese are going to focus on ASEAN, and they pot 20 billion, 30 billion, 50 billion inside Singapore, inside Vietnam, inside Indonesia. Now they're heading towards Malaysia, they're heading towards Philippines to build up for their political sphere. And we know that throughout the entire growth of ASEAN, Singapore is the hub of it all, as we can see the increasing number of expats, wealthy expats, and new Singaporeans and PRs entering Singapore, right? So we know that the market in Singapore, the economy in Singapore will continue to do well, most likely continue to do well. We know three things, right? World economy is on the recovery route. Most of the world is recovering. Number two, 70%, 80% of our economy is going to be growing and doing, not just doing okay, but growing. Even though tech, which constitutes about 10% of our economy, is not going to be doing well, but 70, 80% of it is going to be doing well. Number three, we know that a lot of new foreigners are coming in terms of work, attractiveness of ASEAN and using Singapore as a hub. So more rich foreigners are coming in, and the number of foreigners coming in is massive, and they have a lot more money than us, right? This will boost a certain level of property in Singapore, because when you're well paid in the terms of 30,000, when you're worth millions, you would want nicer property. When you're working in the 70% of the economy that is still growing, you are paid 39% more than the average Singaporean. You want something better for yourself and your family. On the other hand, in my previous seminar, I was just sharing how bad the property supply issues is, right? So we have what? We have COVID round one, we shut down China and US. We have COVID round two, we shut down most of Europe and Malaysia and Thailand, which supplies us the doorknobs and the Gaggenau appliances and the Electrolux, etc. It shuts down all this electronics, right? So round two, I know that you guys think that it's over, but there's still backlog issues. There's still supply chain issues, right? Even though the factories are reopened right now, a lot of the goods are still not entering Singapore on time, right? There's still a massive backlog. On top of that, in order to cool down the market, the government introduced ABSD for developers, introduced lower LTV values, etc., and that creates more risk for the developers. And developers are afraid they cannot sell all their property that they are buying right now. And as such, they are going for smaller and smaller developments, which reduced the supply even more. So even later, after 2026, you're not going to see a lot of supply coming into the market. Right now in 2022, we are almost 100,000 homes and 2 years behind schedule. We are only expect to hit some normalcy in 2025, 2026. That's 3 or 4 years down the line. So if you know that we have one whole bunch of new Singaporeans, new expats, we have one whole bunch, we have 70% of the Singaporeans are going to be doing okay and doing well and doing rich, earning more than the rest of the Singaporeans by a lot. And we know that there's still not enough houses coming onto the market. Then easily we know that all these better to do Singaporeans, better to do foreigners, better to do new PRs, better to do new Singaporeans will be the ones buying all these newer homes, right? So basically, just to prove, even CNA, our local news, say that labor shortages and elevated cost of construction materials will continue, even if there's more construction that is increasing in 2023, costs will continue to go up. And can those doing badly afford it? They cannot, right? So with the drop in the supply that we see, every time we drop the supply, prices go up and less and less and less and less supply hits the market, right? We can see that's how the property prices are going up right now with less and less houses being built. And now with the world economy being uncertain, not everybody is actually being affected, you know. Most people are actually going to be earning way more than the people who have less. This puts only the ones who are doing well being able to afford this. And this lets those who are doing well being able to afford this push the prices even higher simply because the people who are selling now know they have very limited supply, right? So once again, these are the guys who do well, you know, banking, finance sector, the electronics, the comms and media guys, you know, the new Singaporean PRs and expats, right? These are the guys who have salary more than 39%. These are people who have income more than 6 times at $30,000 per month than the average Singaporean. So the income is more than 6 times. This is what they will buy. They buy places with good schools for their kids. They buy larger units. They buy with newer designs. They will buy condos, not HDBs, because not just of the status and the facilities, but it's also a better keeper of value, as I will show later. Okay. Number five, they want somewhere near MRTs. They will want somewhere with very, very good transports and new highways and you know bus interchanges. Right? So we know that the better performing sectors, now it's a fork in the road. It's really truly the final split in Singapore, I believe, because those who are earning better will have a nice rainbow in front of them, and those people who are struggling will be stuck. And the government of Singapore, being the government, having to take care of every single Singaporean on average, will have to take care of the strugglers and will hence push down prices of HDBs or public sector housing, right? So these guys who are doing better, they'll go and buy newer XECs, right? You know, newer XECs like a XECs that only Singaporeans can buy. That's going to hit 10 years soon because they are bigger with full facilities, right? They're going to buy newer condos they're nearer to Circle Line and Downtown Line because Circle Line and Downtown Line brings them to the main hub down south in Singapore right now, the main CBD. They're going to buy newer condos that are in the west because the west is being developed as a second business hub. The new electronics, the new AI industries are there. They're going to buy larger condos in Bukit Timah and Serangoon and Bishan and Marine Parade because the good schools are there. So you all start to catch my drift that these guys, there'll be a whole bunch of Singaporeans, a whole bunch of expats, a whole bunch of new PRs who will be doing well in the upcoming economy, right? And you should try to join them as soon as possible because these guys will continually, exponentially grow their income faster than anybody else who is not in their sector. Okay? And these guys are going to gobble up all the good, newer, nicer, bigger, better properties in the market when the market is still not going to supply. Okay? So this is what these guys are buying. They're buying, for example, Esperina Residences, right? This is a 890 condo at Buangkok, right opposite the MRT. There's a new mall, which is almost the size of VivoCity. Right across the MRT, got a huge space. You get 1,000+ square feet for a 3 bedroom. Each bedroom can accommodate king size beds, etc. They're buying this. They are buying, for example, Lake Life EC in the west, full facilities again, right? Located in the middle of Jurong Gardens, which just came up, the Lakeside Gardens, which is absolutely beautiful, or new national park. Again, with very, very large rooms that can accommodate super single with a study or king size beds, etc. Right? They're going to accommodate this kind of better, higher quality properties, right? The top end of their range, they're going to buy new launches that are big, freehold, new, modern, like No View 18, right? That looks like this. What they will not buy and what the strugglers are stuck with are the HDBs, right? So try not to buy HDBs if you can. Try not to buy HDBs because it's the only option for the less well off. It's the only option for the strugglers, right? Hence, the government is obliged to keep them affordable. In fact, you can see that HDBs are going to push towards valueless territory. What do I mean by valueless? It means no value. So even the SIRS program, which the only time where they're going to do en bloc for HDB by the government, is expected to be very minimal. So they don't even need to review it, the program, because they don't expect to take back any. If they're not taking back any of the HDBs, means the HDB 99 years will run to zero. And when it's zero, the government take back for free, right? And whenever government introduce a new advice, a new legislation, a new cooling measure for HDBs. It's always to press the price down or make life more inconvenient for the HDB dwellers. You rarely see it becoming better for them. For example, the new model for the prime HDB flats, right, is a massive 10-year minimum occupation period. If you buy your flat, if you get your flat when you're 28 years old or 30 years old or 35 years old, in fact, most people get their prime flats at 34, 35 years old. You can only sell it at 45. By the time you wish to invest in property at other time in your life, you're 45, and you can only take a 20-year mortgage, which means your mortgage rates are even higher then. Makes you impossible that you can invest. Plus, HDBs, they are also going through construction issues, right? You see how many delays, 2, 3 years delay. So when they tell you that the flat is going to be ready in 2, 3 years, it could be taking as long as 4 years or more, right? Legal completion date, they always put it as 4, 5 years down the road, minimally, right? And even today, when HDB launches new 9,500 flats for you to choose in November 2022, you start seeing a lot of them are under the 10-year MOP program. And that means that when you buy a new flat, by the time you get, after the delays, after the construction, 6 years down the road, 5 years down the road, you still need to wait another 10 years before you can sell. And by then, how old are you? Are you denying yourself that chance to go and invest in private property, to go and invest in other places, to go and generate that wealth? You can make money off your HDB BTO, but you wait a good 15 years of your life. Imagine your age today plus 15 years. How much time have you left compared to the private condo owners who are earning more, who are doing better in the economy, who only have who can change houses every 3 years if they want to, as compared to your 15 years. So we can start seeing that during this period of time when the world economy is doing unstable, right? My analysis is actually quite correct simply because you see HDB resale volume drops in October, is dropping in November, sales prices are dropping for HDB, the strugglers is dropping for them. But for condo and for landed property prices and the volume is still holding or rising, right? Every time they release a new law, you see, every time they release a new law, there's a 15-month wait out period if I sell my condo before I can buy a HDB. This lessens the number of buyers for HDB as well, dropping the prices for HDB or limiting their upside. So HDB is a horrible, horrible deal, actually. Every new piece of legislation is to make your life worse or make you poorer or make you stuck in the property a bit longer, simply because they have to consider from a political point of view, from a social point of view on how to take care of the entire people, right? HDB is not for profit. as the government repeatedly shared with us, HDB is meant as a dwelling for the people. The government does not care if you make money from it. In fact, the government tells you that it's going to be worth zero at the end of 99 years. And the government takes it as loss-making activities themselves. Second thing that you should not buy right at the moment as well is that you may not want to buy new launches that, unless your budget is more than 3 million, you can buy something really luxurious, which means that if your budget is high, you do not really care about interest rates because you're earning or you have a great deal of money, right? However, if your budget is below 3 million, you may be affected by increasing interest rates simply because new launches can only get floating interest rates and interest rates are rising every single quarter right now, right? And interest rates keeps rising, it means that if you buy a property at $2 million, expecting to pay $5,000 every month, you are actually paying maybe $6,000-$7,000 every month. And this will actually hurt your pocket if you do not have that spare $6,000-$7,000 every month. So if you're buying new launches and your budget is not above 3 million, you have to be a bit careful and you have to ask yourself whether can you afford if the interest rates continue going up, right? New launches are not bad, just that they may cost more than you think. Correct. So my conclusion, and I really want to thank you for today's spending your time listening to me today, is that I just want to conclude that property is mostly tied with economic growth and that not everyone in Singapore is going to get richer. But those better performing ones are going to surge ahead. They're going to do way better than everybody else. And the chances of that happening is almost 100%. It's already happening right now, that the world's focus is more and more towards ASEAN, and the ASEAN's focus is more and more towards Singapore. And Singapore has been reaping the benefits, as we can clearly see, right? This let the better performing ones surge ahead, moving towards better private property, better condos, better landed. And this will continue pushing the condo prices up because there's a lack of supply in condos. Whereas HDB has to be kept affordable as the government continue releasing new policies, even though they lack supply as well. So there will be a permanent split in the prices between HDB and condo. I strongly urge today that if you all want to take back anything, the only piece of information that you all really should take in is that there will be people who are doing well in this economy, and that if you have a choice to buy condo today instead of a HDB, go buy your condo today. That those condos will continue rising in prices for the next 6, 7, 8, 9 years at the very minimum. Whereas HDB is very unpredictable and cannot say, right? The bigger supply of HDB, the government, constantly is trying to reduce its price because it's a political tool for them to house the people. They are taking care of the people. They're not caring about profit. Please follow the group of people who are better at taking care of their wealth to grow your own wealth as well. Look a bit long-sighted. Choose condo, have the freedom to switch to HDB if you want to in the future, rather than HDB choose you and you're stuck with HDB for the rest of your life. Thank you very much for listening. I just want to share some parts of the property will do better. Private property is going to be a bit better. HDB is going to be a bit gloomier, unfortunately. And this is my fantastic team that I have on my left. And I'm also giving out a free ebook on how to select good quality properties. In fact, it's completely free. Feel free to scan the QR code, download for free. Contact me at my number, my website, skyteng.com, if you have any queries. And I would like to thank you so much for your time today. And it's a pleasure having you listening to this. Take care. Bye bye.